Then there's the qualitative argument. For years, IBM have been trying to expand into the cloud. Red Hat is a plug-and-play company. It believes that we're still only 20% of the way into the cloud transition, and the next step will involve shifting mission-critical workloads, they're the best at this, to the cloud while optimizing every business process under the sun. IBM wants to be the one-stop shop for managing your hybrid cloud IT infrastructure. Red Hat's going to make that possible. The deal takes IBM from being, let's say, and also ran in the cloud, wouldn't it be really tough, and transform into a major player. What about the quantitative side? Now, this is really important. We spent a lot of time on this, too. If you still think IBM overpaid, just look at how much the cloud stocks have run since the Red Hat deal was announced. This is really important. Remember, Red Hat was one of our original 7 cloud kings, along with Adobe, Salesforce, ServiceNow, Splunk, VMware, and Workday. On average, you know that those cloud kings are up 51% since IBM told us it was buying Red Hat? 51%. If you look at the market capitalizations, they've increased by an average of 54%. ServiceNow was a $30 billion company in late October. It's now a $55 billion company. VMware's going from 47 to 71. Workday's nearly doubled its market cap from $26 billion to $49 billion, while Red Hat, let's just say it didn't go up as much as a lot of these other companies. The compares. And if you look at the valuation on average, the cloud kings are currently selling for 54 times next year's earnings. IBM paid 46 times next year's numbers for Red Hat, okay? If anything, I've got to tell you, based on these comparisons, you could argue that they underpaid for this company. I'm not kidding. Yeah, the company got a great value, especially if they can keep Whitehurst on. Whitehurst's got to have free reign. He gave me the hat, by the way. I always thought it was like Sinatra. All right, maybe not. Finally, there's the quarter IBM just reported. While the company reported a nice earnings beat in the stock rally, there was some real hair on these results. IBM sales came in slightly weaker than expected, down 4.2% year over year. Cloud sales, excluding the mainframe business, were only up 9%. That's down from 16% in the previous year and 18% in 2018. Ouch. Meanwhile, the legacy businesses continue to hemorrhage. Now, Red Hat wasn't included in these numbers, and I think it's crystal clear that they did need to do this deal if they wanted to start growing it. As Lisa Ellis from MoffettNathanson put it in her piece this morning, IBM second quarter 19, just in time. Red Hat enters as cloud growth sputters. The company's had a critical deceleration in the cloud business, even as the other players in the space continue to do just fine. They needed a change of direction, and that's what Red Hat gives them. It's why I still think this stock is worth owning even up here after this nice day. So the bottom line, the next time you hear someone argue that IBM overpaid for Red Hat, you remember what I just told you. You remember that the whole cloud cohort has been on fire, and IBM needed to do this deal. If anything, I think they could afford to pay more. That's how valuable it is to have Whitehurst running the business for them. Finally, IBM can return to growth mode, and that's definitely worth $34 billion.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.